Hello traders, welcome to another episode of our free forex training tutorials on Leading Forex YouTube channel. My name is Kofi, your admin for this channel. This video is going to be the part 39 of our tutorials. If you are new to this channel, welcome. What we do here is to provide you tutorials that will help you to become a good forex trader. Also, we have another playlist on this channel which we do forecast or signals. So we have two main playlists on this channel. That is the free forex training playlist and then the forex signal playlist. So this video is going to be part of the free forex training playlist. In our last video, which was part 38, yes, we talked about margin and we delved into the basic meaning of what margin is. And in that video, we realized that before you can trade with margin, it will all come from the leverage that you will choose when you are about to set up your live account. So in this video, we are going to finish the whole topic on margin. This is going to be our last video on margin. And just like I promised you in the part 38, I said I was going to talk about leverage in detail. So in this video, I'm going to talk about leverage in detail, okay? And we'll be looking at some brokers, okay? We'll be looking at some brokers and the kind of leverage that they provide, which will help you to decide whenever you are about to sign up with a broker. It will be very necessary to do what we call due diligence. I mean, doing your own research to find out what the broker you are signing up with will offer you in terms of leverage, which will result in the margin that you will use in trading. So to give you a quick recap, we talked about the fact that we have different margins that will be given when you are about to place a trade, depending on the broker that you use, and also depending on the leverage that you will choose when you are signing up or creating a live account. So in that video, which was in the part 38, we said that we have some brokers that will give you a margin, which, for instance, example, let's say 1:100. When you are given a leverage of 1:100, most brokers see that as a standard leverage. Okay, so when you choose a standard leverage, which is 1:100, what it means is that you may get your broker asking you for a 2% charge or a 2% set aside in terms of margin if you want to trade a currency pair like Euro USD. Yes, Euro USD. Your broker may require 2% charge of margin from you. And we said that the margin that is taken aside is more or less a collateral. It is not money that is taken or deducted from your balance or your trading account balance. It is just money that is set aside as a collateral, which will enable you to place your trade, to buy or to sell. Okay, so margin is not money that is deducted from your trading account. It is actually set aside. After you close your trade, whether in profit or loss, the margin is released back to you. So that is what it is. So today, I want us to quickly go and look at the last slide. Okay, the last slide in our part 38 video. In our part 38 video, I showed you the last slide, and unfortunately, that slide didn't come clear the way I want it. So I want us to go and start from that slide, okay? And then in that slide, we will then continue and then look at what margin means in terms of leverage. So here we are. So quickly, let me take off the video so that you will be able to see whatever discussion we have clearly. All right. So I'm putting off the video so that the whole tutorial can be clear. Now, in the part 38, we talked about this last slide here, and this was the last slide in the part 38 video. And we said that depending on, that's the first point, okay, trying to read the first point to you, says that depending on the currency pair, and the Forex broker, the amount of margin required to open a position varies. And that is why your broker will ask you to choose a leverage when creating your live account. The leverage you will choose will determine what margin will be required from you in order to trade a currency pair. Now, the second point says that you may see margin requirements such as 0.25%, 0.5%, 1%, 2%, 5%, 10%, or higher, depending on the leverage of your account. So the leverage that you will choose will determine whether the trade you are about to enter will require a margin of 0.25% or a margin of 0.5% or a margin of 1%, 2%, 5%, 10%, or even higher. Okay? So if that is the case, I want to quickly talk about leverage before I go to the brokers. I have 3 brokers I want to use to actually show you what I mean by you doing what we call due diligence. Okay? Trying to actually find out what the broker will offer you in terms of margin or in terms of leverage. Okay? Now, all that we are trying to say here is that when you are about to sign up with a broker, you are going to be using margin. And in the part 38, we talked about what margin is. So I won't explain that again. So you are going to be using margin in trading. So if you are going to be using margin, then what it means is that the leverage you will choose will spell out the conditions in terms of margin that the broker will require from you. So if you choose a margin, for instance, 1:100, okay? If you choose 1:100, it means some brokers may charge you 2% margin when you are about to take a trade, for instance, Euro USD, or maybe USD JPY, or GBP USD, some pairs like that. The broker will charge you 2% margin. And that will also depend on the lot size you want to use. So if you are going to be using a standard lot, okay, if you are going to be using a standard lot, which is 1.00, which is a standard lot, if you are going to be using this lot size and you have an account of, let's say, $10,000, okay, $10,000, and then you want to use a standard lot size, which is 1.00, then 2% of your account, which is $10,000, will be what? $200. So it means when you enter a trade which comes with a lot size of 1.00 or 1.00, your broker will set aside $200 from this $10,000. Do you understand? So 2% of the $10,000 will be what? $200. You get it? So that is what we mean by using a standard lot with a leverage of 1:100, which is 2% charge. If you are going to be using a leverage that is more than or above 1:100, you are going to receive a lesser margin requirement. I repeat, if you are going to be using a lot size of 1:200, or 1:300, or 1:500, 1:600, 1:1000, 1:2000, then it means you are going to receive a lesser margin. It means that the broker is giving you flexibility. The margin that will be required from you will be less as compared to you choosing a margin of 1:200, which may require 2%. So maybe if you are choosing a margin of maybe 1:200 or maybe 1:500, okay, maybe your broker may only require maybe 0.5% from you as margin. So maybe I have a leverage of 1:500, okay, and then the broker is asking for a margin of maybe 0.25% from me on any trade that I would take. This is quite lesser than someone who is using a margin of 1:100. 1 is to 100, what it means is that your broker may be charging you 2% requirement, or may need 2% requirement. So you come to understand that I will be having extra muscle to flex than you, because your leverage is 1 is to 100 and your broker is requiring 2% margin from you, whilst my leverage is 1 is to 500 and the broker is just requiring 0.25% from me as margin. So you will see that I will have more flexibility on my account than you, who has 1 is to 100. Now, if you choose a leverage that is below 1 is to 100, that should also tell you that you will need more margin. So if you choose a leverage of maybe 1 is to maybe 50, okay, 1 is to 50, you may be required a margin of maybe 10% or 5%. So it is not advisable, if you ask me, it is not advisable to choose a leverage which is below 100. Okay? If you choose a leverage which is below 1 is to 100, you are going to need more margin to be able to play some trades. So you will see that if you choose a leverage which is less than 1 is to 100, it means maybe your broker will only allow you to place 1 trade, 2 trades, and you see that you enter the 3rd trade, they tell you don't have margin. Or you enter the 2nd trade, you'll be told you don't have margin. So I will always advise that you choose a leverage which is not less than 1 is to 100. Because a leverage which is below 1 is to 100 will need more margin. And then a leverage which is above 1 is to 100 will need less margin. Please do understand. So always choose a higher margin if you have it, or leverage, to put it. Always choose a higher leverage. That's what I mean, not a higher margin, sorry. Choose a higher leverage. Maybe 1 is to 500, 1 is to 1,000, 1 is to 2,000. Whatever will be a higher leverage available, choose it. Don't choose a lesser leverage. Even if you have 1 is to 100 and we have 1 is to 500, choose the 1 is to 500. 1 is to 100 is very, very high as compared to 1 is to 500, or 1 is to 200, or 1 is to 300, or 1 is to 1,000, or 1 is to 2,000. So you will have the less leverage if your your leverage is high. You will be required lesser margin if your leverage is high. These are the terms. These are technical terms in the Forex land or the Forex world. So permit me to use them. So if you have a higher leverage, you will be required a lesser margin as compared to someone who has a lesser leverage which requires a higher margin. I pray you understand these technicalities. They are terms and I want to use them as such. So always look for a higher leverage in case your broker will provide you that. Is that okay? Now, I want you to quickly come with me to 1 or 2 brokers so that we check. We do what we call the due diligence. Is that okay? So let me take you straight to these brokers for us to check something for ourselves. Now, we are here on 3 different brokers and I want us to quickly do what we call due diligence with them. Is that okay? Now, this is broker 1, which is Exness, okay? And then I have broker 2 here, which is Blueberry Market. The link is opening. Blueberry Market is broker. This is broker 2, Blueberry Market. And then broker 3 is going to be FX Primus. It's loading. So broker 3 is loading. Yes, this is FX Primus. Is that okay? So now let's look at what we call due diligence. Assuming you have these 3 brokers with you, or you've been exposed to these 3 brokers, you want to sign up with one of them, or you want to register your live account with one of them. So you want to find out which one has the comfortability or the good leverage to use. So remember we said the higher the leverage, the lesser the margin that will be required from you. And then the lesser the leverage, the higher the margin that will be required from you. So this is broker 1, which is Exness. So let's go to the menu. You haven't signed up yet. This is open account button here. We haven't gone there yet. We don't even want to go there. We want to look at the broker first. So let's go to their accounts. They have, when you come to account and instruments, they have account, the standard account, professional account. So let's look at the standard account. So we click on the standard account. It's loading. My network is a bit slow, but it will surely open quickly so that we look at it. So standard account, please open and let's see. And then we'll look at the professional account too, so that, okay, so we are now on the standard account. Now, quickly, let's look at what they have. Now, on the standard account, Xness is telling us they have standard account and then they have standard cent account. Now, the standard account, the minimum deposit depends on payment system, okay? So it means they have the lowest deposit that you can make. They have the lowest deposit. Sometimes you can even deposit as least as $10, $5 into their account. So it depends on the payment method that you want to use. So they have stated categorically that if you want to use maybe Bitcoin to deposit, this is the minimum that will be required from you. If you want to use your bank card to deposit, this is the minimum that will be required from you. If you want to use online payment platforms like maybe Skrill or any other platform, they have a standard deposit minimum that will be required. So that is that, but I will not talk about that. We want to look at leverage. Now, the standard account, they will charge you a spread which ranges from 0.03 spread. So it means they have the least spread that they can charge, okay? The commission, they charge no commission, okay? So it means this broker, they make their commission from spread, okay? That is what it simply means. It means they make their money from spread. They put spread when you are about to take a trade. They add their own spread to the spread that is available. Is that okay? All right. Now, maximum leverage. This is where our interest is. Maximum leverage. They have 1:unlimited. 1:unlimited. And their unlimited simply means that 1:2,000. That is what their unlimited leverage is. 1:2,000. Which means they have enough leverage for every trader. So you could choose 1:200, 1:300, 1:500, 1:1000, 1:2000. They have all that available. This is the broker that is offering you unlimited leverage. Very, 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 very flexible. It means the least margin will be required from you if you want to place a trade. So this is what this broker is requiring from you. And then the instruments too, they have Forex, they have metals, they have cryptocurrencies, they have energies, they have stocks, they have indices, all available when you choose the standard account. And then they have platforms. They have two platforms, MT4, MT5. MT4, MT5. So if you want to choose the MT4 or MT5, you decide. So if you want to open an account, they have the two platforms. So you can open a standard account with the MT4 or a standard account with MT5. So this is broker 1. Their leverage, maximum leverage is unlimited, which is about 1:2,000. Is that okay? Good. Now let's go straight to broker 2. This is Blueberry Markets. This is the second broker. All right. Now, when you come to their menu, they have market analysis or learn trade with us. Okay. When you come to the menu trade with us, they have account, they have pricing, they have platforms, they have the instruments. So the account types, they have account types. So let's click on the account types because that's where our interest is. They have the pricing, they have Forex, shares, cryptocurrencies, commodities, metals, indices. Then the platforms, they also have the MetaTrader 4, MetaTrader 5, and then the Web Trader platform. The instrument, they have Forex, shares, which is the CFDs, the crypto CFDs, commodities, metals, and the indices. But we want to look at the accounts. So quickly, these are the accounts. So when we come to the account, they have the Blueberry Standard account and then Blueberry Direct account. So the Blueberry Standard account, the deposit ranges from $100. So for them, they have specified that to have an account with them, you need a minimum of $100. That is the standard account. The Blueberry Direct account, they are saying that you need $100 to start with. Okay, fine. Let's go into detail of these two accounts. Now, they are spread. Here, their spread ranges from 1 pip upwards. 1 pip upwards. It means with this account, which is the Blueberry Standard account, they charge you spread. But the Blueberry Direct account, they don't charge spread. So it means when you choose this account, they make their profit from what we call commission. And when you choose this one here, it means they make their profit from spread. Now, when it comes to commission, here you see that commission is 0. They don't charge anything on commission. But here they can charge you a commission up to a maximum of $7 per commission on a single trade. Yes, per single trade, they could charge you a commission up to a maximum of $7. That is when you are using the standard lot. Okay, when you are using the standard lot, this is the maximum they can charge you. Is that okay? Now, minimum deposit, already said, 100. Now, maximum leverage on this account is 1:500. So for them, they don't have the unlimited leverage. Their leverage, the maximum you can get is 1:500. It's also good. Yes, not bad at all. 1:200 is there, 1:300 is there, 1:500 maximum. So the leverage 1:500 is not bad at all. All right, but if you compare this broker to the first one, which is Exness, you will see that Exness is giving you more flexibility in terms of leverage, because they are giving you unlimited leverage, which is about 1:2000. But Blueberry is saying their maximum they can give you is 1:500. You get the difference. On both accounts, whether you are choosing the standard or the direct account, all is 1:500 maximum. So their minimum trade size is 0.101, the same thing. Then the tradable instrument, they have over 300 instruments to trade. And then the trading platforms, they have the MT4, MT5, and the web. All right. So you see the difference in terms of leverage with broker 1, which is Exness, and then broker 2 here, which is Blueberry. Now quickly, let's go to broker 3, which is FX Primus. Okay. So under FX Primus, let's go to the trading. Under trading, they have accounts. As you can see, they have accounts. So under account, they have the Palm Master, Palm Follower, Demo account, and then account types. So we are interested in the account types. So let's go to the account types and see what they have for us. So the packages are here. All right, so quickly, account packages. Now look at it. Okay, so when it comes to the account packages, they have Primus Cent account, Primus Classic, Primus Pro, and then Primus Zero. So they have 4 different type of standard accounts that you could have with them, okay, or you can have with them. Now, the base currency you can use on Primus Cent is only US dollar, so you can only create that account in US dollars. The Primus Classic, you can create the account in US dollars, Euro, GBP, SGD, and then PLN. And then the Primus Pro, you can create the account in USD, Euro, GBP, SDG, and then PLN. And the Primus Zero is only USD, Euro, and then GBP. So this is the base currency. It means the denomination in which you can create the account. Now, account spread, average spread. So here on the Primus account, they make their money through spread. So the average spread they can charge you is about 1.5 pips. So it means they could charge you more, but the least they can charge you is 1.05 pips. And then the Primus Classic too, the same thing, starting from 1.5 pips. The Primus Pro starting from 0.3 pips. And then the Primus Zero, they don't charge you spread, but they make their profit from what we call commission. Now, when we come to commission level, all these ones have 0 commission. So here, no commission is charged because they are charging from spread. Here, too, no commission because they are charging from spread. Here, they charge you spread, and then they also charge you commission. So when you use the Primus Pro, you will pay for both commission and then spread. So they make their profit from both spread and then what? Commission. Now, if you are choosing this Primus Pro on the MT5 account, they charge you a spread of a commission of up to a maximum of $8. And then if you are using the Primus Pro on the MT4, they could charge you a commission up to a maximum of $10. That is depending on which of the platforms you are using. If you are using MT5, they could charge you up to $8. If you are using MT4, they could charge you up to $10 maximum of commission. Aside the spread that they will charge, they still charge commission. Now this one, they don't charge spread, which is the Primus Zero, but they charge commission up to a maximum of what? $5, depending on whether MT4 or MT5. They still charge up to this maximum. Now leverage. This is where our interest is. Leverage. Here the leverage they are charging you, the maximum they can give you is 1:1,000. 1:1,000 on this account. On this account, they give you a maximum of 1:1,000 again. On this account, they give you a maximum of 1:1,000 as leverage. And then on the Primus Zero account, they give you just 1:500. And this account, you can only use MT4. This one to only MT4. But the rest, you can use. Okay, that is the bonus. If you want a bonus on your deposit, for them, they give bonus on deposit. So if you want bonus on deposit, you can only receive the bonus if you are using MT4 or MT4 here. So it means if you register with Primus Classic and you are not using MT4 but you are using MT5, it means you will not get a bonus. If you are using Primus Pro 2 as an account and you use MT4, you get a bonus. But if you use MT5, you will not get a bonus. So these are the technicalities. When it comes to negative balance protection, they have that also as an additional tool. And then the swap fee. Here, they don't charge swap fee. They don't charge swap fee here. Okay, simply they charge swap fee here. Sorry, they charge swap fee here. They charge swap fee. They charge swap fee. But on the Primus Zero, they don't charge swap fee. So you see, these are different accounts you can choose on just FS Primus. And each of the account comes with its terms and conditions. So when you look at FS Primus, one of their accounts, which is a standard account, Primus Zero, comes with a leverage which is equal to Blueberry Market, which is also 1:500. But they have other accounts which comes with a leverage up to a maximum of 1:1,000, 1:1,000, 1:1,000. So XNES is also giving you unlimited leverage. Unlimited leverage. Unlimited leverage. So when you look through these three accounts, when you check through these three brokers, you will realize that comparing just these three brokers, I don't know which one will be the best option for you. Okay? I don't know which one will be the best option for you. Would you want to go with XNES, which comes with unlimited leverage, which is up to a maximum of 1:2,000, or any other? Or you want to come with Blueberry Market, that gives you a maximum of 1:500 as leverage? Or you want to come with FS Primus that has both the 1:500 as maximum and 1:1,000 as maximum? I may not be able to sit here and tell you that this broker is best than this one. They are all good brokers. And there are also many other good brokers out there. So I may not be able to just sit down and tell you that use this broker. But in case you want my broker, which I use in trading, in case you need my broker, which I use in trading, I can actually refer you to that broker. And I won't mention that broker here. But if you need my broker to sign up with, I can actually give you that. Okay? That is, if you contact me privately, I can give you that. So, quickly, that would depend on you to choose based on this explanation in terms of brokers. But we are not yet done. Let me show you this as well before we end. Now, quickly, to end, okay? To end, I want you to also take note of this, that whatever broker you will choose, make sure that you check the leverage and then know which one you want to use. And then also, finally, what I want to say is that if you want to contact me to get to know what broker I have available, or what broker I can give to you, you can contact me through these platforms. My Telegram handle is there, my email is there, my phone number is there, my WhatsApp number is also there. So you can contact me and then I will help you out in terms of if you want to use my broker. All right. Now, finally, I have a Telegram page for you to join free. Okay. Join this Telegram page because we do provide signals over there. So join it and then I'm sure you'll be able to get some free signals. To join this Telegram page, just search for this link over here. It's an open Telegram page. Currently, I have 579 members in that group right now. The group name or the Telegram page name is Forex Signals Only. Forex Signals Only. So once you search, it's a one word. Type Forex Signals Only. Or the link is t.me/Forex Signals Only. t.me/Forex Signals Only. Once you search for this in your Telegram, you will see this logo and then you will see this brand. Once you see this, you can join this group, and in this group we provide signals. As you can see, signals are being provided free of charge in this group, and it's a free channel to join. So join that and also subscribe to this channel because we also have free signals that we have as a playlist on this channel. So we're going to come with a new signal in terms of practicals, analysis on this channel. So subscribe to this channel so that once you benefit from the free signals on this YouTube channel, you can also benefit from the free signals in the Telegram channel. Okay, so subscribe to this channel and expect new tutorials coming your way. We're going to a very interesting tutorial which is coming up next, and I'm sure you can't afford to miss it. We will be coming with a tutorial which has to do with moving average. Moving averages. Have you ever heard of moving averages? If yes, that is where we're going. That is where we are actually going in our next tutorial on this channel. So subscribe to this channel and expect the moving average videos coming soon. We are done with margin. We are done with leverage. Expect the next video which is going to be on moving average or moving averages. You will love that topic. We have many other topics coming your way. So subscribe to this channel. Once again, my name is Kofi, your admin for this channel. I will see you in our next video. I love you and please take very good care of yourself. Until then, I will see you in our next video.